I thought the market took a little bit of a move lower on that as well, just given where rates are, concerns about the deficit, et cetera. Your thoughts on all three?
Well, you know, it does seem like a pattern in 2025 as markets sort of take a hit on Fridays and maybe panic Monday. So I don't know if that's going to be the case. To me, I think the inflation headlines from UMich they're not great to see, but also I think that they are messed, or there's a political component to this, because if you break that down between Democrats who see 5% inflation and Republicans at zero, the blend is actually pushing this number up. But to me, it just gets messy around elections.
Yeah, but I mean, let's be honest. There are broad concerns about parts of this agenda from this White House, including, I might add, from the Fed, that it could be inflationary when rates are already more elevated than I think the Fed would like to see. They'd like to be able to cut more, but their hands are tied. And one of the reasons their hands are tied because of tariffs and unknowns about inflation. Fair?
That's fair. I'm not sure the UMich survey reflects their assessment necessarily of the tariffs as much as, let's say, the bond market. And the bond market seems less concerned about it because, as you know, yields have backed off from 4.8 towards 4.5. But you're right. Tariffs are a reason to be uncertain. But so far, I think if I looked at how markets reacted, I think they've actually taken them in stride.
I mean, your biggest takeaway thus far, you say, is that the market's proving resilient, which, I mean, let's be honest, too. Since the start of this bull market, it's been one heck of a resilient market. It's been able to deal with almost anything thrown in its face. You've had a couple of panic moments. Monday, off of the tariff news, last August, with the unwind of the carry trade, and then we just continue to set new highs.
That's right. And I think in 2025, a lot of investors thought maybe the playbook would change because we just put 20% years behind us. But I think with January being up 2.7%, and I think these sell-offs being bought, it does feel like the same market that we had last year.
What are you worried about?
Well, I'm worried about sentiment becoming too bullish, but actually
bullish?
But it's turned the other way. You know, sentiment actually has weakened pretty meaningfully. And I'd worry about a policy error from the Fed. And as you know, the bond market still thinks there's more than a 20% chance the Fed hikes this year. I think it would be obviously a policy error if they raise rates.
What about a policy error from the White House?
That's also something markets worry about, yes. But so far, I would say that the news that we've seen on tariffs, they've had more bark than bite, meaning they've proven to be opportunities for investors to buy.
What would you buy?
Well, the big news this week in our minds is the ISM moved back above 50. That really does point to earnings dispersion improving. So I like industrials, you know, the financials. I mean, the small caps, which have been, you know, not a great outperformer yet, but we still think small caps are going to do well this year.
Tom Lee thinks there is still one thing you all might have missed about the Nvidia stock. One key detail that will transform all expectations and get you excited for what's to come. As this tech titan, boasting a formidable market cap of $3 trillion, grinds into 2025, questions loom large. Is Nvidia still a scorching hot buy, or is this powerhouse of chip making slowly cooling? Tom Lee thinks it is a hot buy, so let us delve deeper into his reasoning. Welcome back, everyone, to Investocracy.
Again, Nvidia, by the way, having its own big week. Christina Partsenevelos joins us now with more on that move, which has been pretty good in its own way, right?
Yeah, because Nvidia shares are finally breaking out of their 2025 slump after climbing, more than 5% this week, and it was pretty much trading flat all year since January. The stock had been held back, though, for two main reasons. Potentially, number one, potentially tighter export controls under the Trump administration following DeepSeek's recent breakthrough. That's when you really saw the stock drop in mid-January. And production challenges. That's point number two with NVIDIA's next-generation Blackwell chips. These supply chain worries led Mizuho analysts, for example, to project just in-line results for NVIDIA's upcoming January quarter. That's going to be, we'll get some more details on February 26th. But the outlook is improving. HP Enterprise has now shipped its first Blackwell-based product, while AI server maker Supermicro is forecasting surging demand for 2026, a strong signal for future NVIDIA chip sales. Meanwhile, NVIDIA's investment arm has been reshuffling its portfolio. The company's latest filings show it did indeed cut its stake in ARM Holdings by 44% 4% to 1.1 million shares and completely exited positions in NanoX Imaging, Serve Robotics, and SoundHound. SoundHound shares actually falling about 29% today on that news. But Nvidia is also placing new bets, acquiring 1.7 million shares in self-driving tech company WeRide, which has soared today over 80%, that's share price, and then also taking a $1.2 million share position in AI infrastructure firm Nebius Group. That shares stock is also up about 5%. Keep in mind, these are Q4 numbers, not reflecting Nvidia's investments in 2025. Scott.
All right.
The robo-taxi firm operates a range of autonomous vehicles like robo-vans, robo-road sweepers as well across 7 countries. It's launching a pilot in Switzerland and a partnership with Uber to offer robo-taxis in Abu Dhabi. Nvidia is no stranger to this industry, providing AI computing infrastructure for driverless cars. Its Drive platform, that's the name of it, helps robo-taxis process sensor data in real time. As for Nvidia's other investments, the 13F reveals Nvidia still owns stakes in Applied Digital, as well as Recursion Pharmaceuticals as of the filing date, which we know doesn't reflect investments in current time 2025, but it's helping all of those names move higher today.
With a price-to-earnings ratio soaring above 50, skeptics might raise eyebrows. However, seasoned investors know better. They rely on the astute price-earnings-to-growth ratio to unearth the true potential. Clocking in at 0.96, Nvidia's PEG ratio reveals a stock with a promise, with anticipation hanging in the air about generating more than $63 billion in profit on $113 billion in sales over the past year. Nvidia continues to woo investors. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Yeah, I'm personally, I was just listening to this whole report, but I'm perhaps most curious about the Parts Nevilis investment because it sounded like there was a baby behind you, and I'm all for that. But if I stick with this,
there's a baby right next to me.
Love it. But if I stick with Nvidia, I am just curious because as we see companies like Nvidia get bigger and bigger, the ability to do more and more M&A, at least in the past couple of years, has been perhaps stifled. And so I wonder if we continue to see more of these types of investments, these types of strategic partnerships, et cetera, from companies that are flush with cash above and beyond Silicon Valley and above and beyond hedge funds.
You could say definitely that's the case for Nvidia and its shareholders, and I say that because the stock and share price has been range-bound for quite some time. Around the 200-day moving average of $125 to just passing the 50-day moving average of $135. I bring that up because investors want more. So when you have the ARM investing in various companies like the WeRide, for example, it shows that Nvidia is putting its money to work and possibly in future M&A activity, which would bring back some return to shareholders, because right now it really takes a lot to impress Nvidia's shareholders. The stock's up dramatically over the last year, but year to date pretty flat.
Yet uncertainty lingers, where ominous clouds, aptly named DeepSeek AI, threaten to rain on Nvidia's parade. This sleek, cost-efficient model challenges Nvidia's dominance in AI chips, prompting investors to reconsider their tech portfolios. The question remains, are Nvidia's chips truly indispensable in AI development? Tom Lee thinks so, but before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Actually, we believe that over the next few years, there's going to be an increase in demand for the chips from Nvidia, from AMD, and from others, not a decrease. This is known as Jevons paradox, because although, yes, initially you might think, well, with DeepSeek out, maybe it's cheaper to train, fewer GPUs, but over time, more people can access the technology, more people want to use it, more inference also, that is, when you use the models themselves, not just training the models, that leads overall net to an increase in demand for data centers and for chips. So I think it's actually a very positive impact that DeepSeek is having. It's broadening out the space. It's bringing prices lower and ultimately will increase access to these kinds of technologies.
We need to check AI chip giant Nvidia versus ARM holdings. ARM makes the blueprints for Nvidia and other semiconductor companies' chips. An SEC filing shows Nvidia sold about 900,000 of its 1.9 million share position it had in ARM. No comment on why Nvidia sold the shares, but ARM is smarting from the move. We've got Nvidia up 2%, ARM off the lows of the session, but still down about 4.5%. Arguably, on any other day, ARM might be jumping on this headline. The FT reports ARM will actually start making real chips, not just the blueprints of chips, as early as this summer. And its first customer will be Meta. Meta on pace for its 17th straight record close. It's really historic here, folks, and its 20th day of gains.
Why should investors still have faith in Nvidia, even amid a slowdown? The answer lies in its sheer strength and resilience. Despite potential short-term turbulence, Nvidia continues to anchor itself firmly in tech waters, thanks to robust profits and savvy growth strategies that fuel optimism among long-term investors. But what do you think? Share your perspective. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.